Okay, good afternoon, everyone, and I welcome you to the very first webinar here for me anyways, this year, and I appreciate the opportunity to have Jim and Infinity Futures host our webinar for us today. And I want to wish everybody right from the outset a very happy, healthy, prosperous 2015. And we've come off a very, very good year in the markets, and we hope this coming year here will be equally as good. So to kick off the inaugural webinar here for this year, I want to just tell you a little bit about myself and what will, in case for those of you that don't know who I am, and what we'll do today is, as the title of our webinar here, our favorite trade setups. So what we're going to do is I'm going to take you through some static PowerPoint slides to give you some background of what we look for in our particular setups that we use in our trading room. And once we've gone through the formal kind of application, we're going to actually take a look at more of the fun stuff today. I mean, between yesterday and today, with the markets, the way they've been trading, has really provided us quite a bit of trading opportunities that really kind of fall right into the sweet spot of our trade methodology. When the volatility is real low, all right, as everybody has experienced, it's very difficult to make any money, to get any price movement. On the flip side of that, when we have VIX that's up near the upper 20s and 30s, okay, and even beyond that, it's actually excess of volatility, and that becomes very difficult to trade as well. When the VIX is somewhere around that 20.18 to, like, say 22 zone, that's kind of a sweet spot, all right, where there's enough range and volatility yet not excessive, all right. So our trade methodology kind of fits right into that sweet spot. Okay, so moving forward on the next screen, I just want to just give you a little bit of background of who I am. As Jim said, he got it right on the button. I've been around for 30 years as a trading veteran, and my background specifically has been focused trading for the investment banks and a few various hedge funds over the years. I've listed a few there. All right, back in the early day of my training and my early experience, I worked for what was called at the time Shearson Lehman Brothers. It had since morphed over the years and went into Lehman Brothers, and of course now Lehman Brothers no longer exists. Following Lehman Brothers, I spent a few years at a smaller, not so much an investment bank, but a biotech investment house, and then I went on to join the ranks over at United Bank of Switzerland, UBS, and I was there for approximately 8, almost 9 years, and I ran the biotech healthcare group at the time, trading individual stocks, but also I traded, UBS exposed me to trading a lot other different products. We did a lot of various managed products as well, certainly derivatives, and of course futures was a big part of that. So I got quite a bit of experience across a various broad array of products. And when I left UBS in 2004, I went on and I worked at a couple small, what we call, again, the high frequency hedge funds, but they're not the HFTs of today necessarily. Okay, most of those are all computerized. But I did work at high frequency hedge funds where most of the activity was kind of, you think about it, it's more turbocharged day trading. Okay, and I specifically focused primarily in the S&P futures. And a lot of what I have brought to our membership here at Polaris has really kind of been, is more of an amalgamation of what I've learned over the years at the investment banks and at the various hedge funds that I've traded at. And I've taken a number of concepts that the investment banks used when I was a market maker over there, and put those together in kind of the methodology of what we do. So when I was over at the investment banks, I was a market maker enlisted in various NASDAQ stocks, and of course I've traded futures and derivatives, and it was involved heavily in the portfolio risk management end. So that's a little bit of my background. What I'd like to do now is just tell you just a touch about what our mission is here at Polaris Trading. All right, and some of the benefits, of our trading service and so forth. Okay, I've kind of narrowed it down to 4 core aspects, and now there are various subcategories to each of those, but I want to just touch upon these, and then a lot more of the detail is highlighted actually on our website. So if you get a moment and later after the webinar or when you have a chance, you can look a little bit deeper into that. But number 1 on the top of the list, and again, these aren't necessarily in order of priority. You think about them as kind of a nucleus, with an atom with all these electrons kind of moving around. All right, and that's kind of the design I've tried to make there for everybody. Is that the skills and the competencies that we want to try to get across to our members is really kind of a variety. And number 1 on top of the list that I would say is we're trying to help our members improve their decision-making skills. Okay, many of you have come to trading from different lines of businesses, and you've been very successful. The knowledge that you bring and the decision making that you've made during those formative years prior to trading, when you bring those skill sets to trading, many time members or developing traders simply find that the skills that they've brought to trading are not the skills that they actually need in trading, and their decision making skills that they've had throughout their entire lives are not working for them. Okay, so what we want to do is we help you rearrange or redesign how we make decisions in trading. And this is a really, really important part of becoming a successful trader. It's not just enough of knowing how to enter a trade. A lot of that is the mechanics. All right, so we want to help you guys improve your decision-making skills. Following that, we want to help you learn empowering trading habits. Okay, and so that's an important category as well. And there are subcategories to that, but we all have bad habits. All right, and whether you enter a trade too soon, too late, you're impulsive, you're doing things, many of us, and we all have done this, we have bad habits that we want to break. So we want to help you break those bad habits and learn new empowering ones, simply. All right. Also, since I've come from the investment banks, there's kind of the people that I've come across over the years, after I've left the investment banks, seem to find that the pricing action is mysterious in a sense. It's almost like the wizard behind the curtain. Okay, and the Wizard of Oz. Pay no attention to the man behind the curtain. Really, what we try to do is we take that veil away. All right, we just demystify price action. And we're very transparent in what we do with our members, and I try to give them as much information as possible to be useful. And then simply segueing into that is simply there's a lot of uninformed traders out there. Okay, some people categorize people as retail or novice or so forth. Expert. I simply categorize everybody as you're either part of the informed group or the uninformed group. Okay, the informed group, all right, tend to be the ones that are more disciplined. They know what's going on, and they trade their methodology, and that tends to be that 5% or so group. The uninformed, which is simply everybody else, okay, that's trying to struggle and learn, they're always one step behind. So that they always say, oh yeah, now I get it, but after the fact. All right, we want you to be before the fact. In other words, we want you to be right there, informed. All right, have the appropriate competency and knowledge to make the proper decisions and so forth. So it kind of circles around each other, and one is not more important than the other, but as a whole, it kind of helps round our members as developing traders. So that is the core mission of what we try to do at Polaris Trading Group, and I try to bring my 30 years of experience to the membership, and hopefully our members prosper by that. Okay, so now let's get into the subject matter for today, and that simply is our favorite trade setups. Now, on the next screen, here are the strategy trade descriptions. Now, I've categorized them, and we'll take a look at each of them individually. So, beginning with the opening range, there's one key price for the day. That's important, and that simply is the 5-minute opening range average. All right, it's the average price or the midpoint price of the first 5 minutes. And when I was a market maker, we used that quite a bit. So this is something that's really important. And there are other educators out there that specify specifically their education is all around the opening range, gaps and so forth. We don't really use gaps per se that way, but simply we reference the opening range price, all right, that key marker for the day, as an important price, and it really can tell us what the sentiment is, all right, for the day as it's beginning to unfold very early. The next category is one of our core strategies. It's called premium and discount. All right, and we utilize it's a CCI crossover system, commodity channel index. It's been around for a long time, developed by Don Lambert. Very popular with a lot of folks, but what we have done is I've morphed it into a specific strategy of how we use it. We don't necessarily use it the way it's defined, and we use a dual system. So it actually is, as far as I'm concerned, I tell our members this, is that it's almost like my all-terrain vehicle, okay, my Humvee in a sense, all right. It's useful for trending conditions. It's useful for range trading conditions. We don't have to switch from indicator to indicator, back and forth, all right, as many traders do. The more moving parts that you're using, the more confusion that may cause. If whichever favorite indicator that you may be using to help make a decision, make sure you get to know that indicator, all right, inside and out, all the nuances of it, and all the various, the variants of it. It's really important that you do understand, how an indicator, what is it showing you, all right. It's if you have something on your screen that you don't really truly understand, then it's of no use to you. Okay. The opening range, I'm just seeing a question here, but the opening range is simply the New York Open, okay, 9:30 Eastern Time. So that's the time slice that we're using, Fred. And then the next category is what we call a stacker. And simply that identifies the early part of a trend shift. And it's really important because most people want to be on a trend, right? For the majority of us, we're probably, trend traders, okay? Or I just simply call myself a directional trader rather than necessarily a trend trader, because intraday trading, trends take time to develop, a true trend. But there are very directional moves, okay, that happen even within the context of a wide range. Okay, so I'm more of a directional trader, all right, rather than necessarily a trend trader, but it has trend trading qualities to it. Okay, so these are the three kind of categories of trade strategies that we have, and again, to be successful in trading, you don't need 15 different trades. All right, you need a few that are battle tested. All right, not only have we back tested them, we've battle tested them in different environments. Okay, bear markets, bull markets, ranging markets, everything. They need to be battle tested. And in terms of the qualities of the trade setups that we look for, there's four of them, all right? And just something to keep in mind is that they all have to be clearly identifiable and simply pattern recognition. Repeatable on all time frames, okay? So you'll see some various time frames that we use here intraday, but they really need to be repeatable on various time frames, okay? And they are. Quantifiable in risk, all right? That's an important part of what we do, all right? We want to make sure that the risk to reward ratios are favorable. And of course, we need to have a measurable potential, profit potential, okay? The strategies in and of themselves, in the core part of the methodology, we can break it down into three parts: price level, pattern, and momentum. And it's in that specific sequence, okay? You cannot have momentum unless you have a price pattern and coming off of a key price level. So there's, and we'll talk about the key reference zones as we go along this afternoon. So key reference zone, price level, pattern, right? So is it a corrective pattern? Is it an impulsive pattern? Is it a pullback? Those type of things. Patterns can come in various delineations. I mean, you can have candlestick patterns. You can have simply core 1, 2, 3 type patterns, ABCs. All those type of things are important. And then finally, momentum. Once we get a price and pattern in, it's really the momentum that pays us, okay? And moving quickly, because I want to get to the charts with you guys, is that in the decision process, okay, that we use, we have a specific decision matrix called the OODA loop, all right? And that simply stands for observation, all right, which is price action, orientation, which is, what's the correct side of the market? Where are we, what is the market showing us, and what side of the market should we be trading on? Okay, once we get that down, and that's a big part of, trading, there's a lot more observation and orientation throughout the course of the day rather than, clicking the mouse trading. But once we have those two segments of the decision process firmly in place and we understand what the market is doing, then we look for our trade setups, and that's the decision and action cycle, okay? Specifically the OODA loop, that actually is subject for an entire full webinar, okay? And we've done work with our members on what we call Wednesday workshops that cover that in detail. So that is all part of our education. And then finally, the action part of it is simply your trade execution and management, okay? So with those things in mind, the opening range, premium and discounts, and stackers, okay, let's get right to some slides, and then we'll get to the charts from today. Okay, so on the next slide, we should see the opening range strategy. Now, this is a snapshot of a 5-minute chart, and just let me highlight some of the key important parts of what we look for here. That first 5-minute opening range average, okay, is highlighted here, okay, and that becomes our core kind of a benchmark for the day, okay, or for the early sentiment in the morning. Again, a lot of times in the overnight, there's news out, there's money managers making decisions on what they want to do the next day, okay. All that collectively is brings about during the initial opening range. Do we have a gap up, a gap down? Okay, and again, the S&P typically gaps pretty much every day, okay? So we take kind of gaps in stride. But what we do look for is we look for price evidence, okay, of how that price is trading relative to that initial sentiment marker, again, which we call the opening range average. And then what we do simply on there, and again, this is not kind of rocket science in the way we make our targets. Is simply we take the initial range of the opening range, the opening range high, the opening range low, and then we just simply calculate, 50%, 100%, 150% of that initial range, and it kind of gives us some initial targets. Are they perfect targets? Are they, some people like using Fibonacci style targets, all right? Nothing is perfect, all right? It's more, what we look for is consistency, okay? And then how we trade a specific opening range, we discuss very actively in the trading room, okay? And our education, again, has much more detail about this. But in this particular example, the market kind of, on the left-hand side here, the market kind of shot up. It was kind of chopping right around that opening range zone, and then pushed down below the opening range average here. I forget which day this was. Looks like a December 9th. And then found support near the first lower target. So not only are these targets used as targets, but they're also used as support or resistance points. Okay, so as part of, so it's kind of a duality of what we, what these various zones are used for. And this particular one, something we call equilibrium time. And equilibrium time simply is the first hourly, the end of the first hour, or market profile people would call initial balance. Okay, and so that's typically when there's a move in one direction. When you get to that 10:30, Eastern time, 9:30 Chicago time, there's usually a reversal of some sort, at least an attempt of a reversal. And if it's a strong trend day like we saw today, then there wasn't a reversal. Okay. As a matter of fact, there actually was a reversal. We're going to get to that. So once price found the reversal and came back up and held above this opening range average here, okay, as you can see with that green arrow, once it took out the opening range high, the range high there at 37.75, it was off to the races. All right, so these are all signals that tell us that the market is building momentum. It found the price point, support off a price point, popped up, held the opening range sentiment line, and then at this point, throughout throughout this area here, where the price kind of consolidated a little bit, this offered us a low risk opportunity, okay, to establish a long position for a move above the opening range, and then a trigger, all right, that we use simply is a break above the opening range high. All right, and so at various price points, all right, near key levels, that's where we simply look to take some of these trades. And then, then we look for the upper range targets or the lower range targets, whichever are in play. And you can see these particular three targets on the left-hand side that day worked out very nicely. Moving over to the right-hand side is pretty much the opposite of what happened. Prices opened with a gap down, and as you can see, proceeded to continue down, and each subsequent bounce attempt. So again, here's the equilibrium time. Okay, again, that's 10:30. There's an attempt to reverse. All right, so this particular case, it actually did attempt to reverse, but that attempt on the reversal failed to get back above the opening range, all right, average. Whereas in the prior example, it did get above the opening range average and found support. So these are almost, in one sense, a bit of a mirror image, conceptually anyways, is that after that first push down to the 10:30 low at the equilibrium time, prices failed to get back above. And again, that opening range average is really an important marker for us, okay? All right. We use a 5-minute opening range. Some people, here's how we actually define it. The first 5 minutes is we call the opening range rotation. Okay, and the word rotation is the important part. All right. A lot of people use 15 minutes as a true opening range. Others use 30 minutes as an opening range. Right, the true opening range. Whichever you use, all right, is fine. There's no hard definition of whether it's 15 minutes or 30 minutes. All right, but whatever you decide to use, all right, I know several people use 30 minutes. Use that 30 minutes. okay, to take your measurements from and so forth. Again, a lot of people use 30 minutes because market profile time slices are in 30 minutes, okay? So that's perfectly fine to use. So we use, when we say the opening range strategy, we're really talking about the opening range rotation, okay, which is the first 5 minutes. And again, when I was a market maker for the investment banks, this is exactly how we used the opening range, okay? Again, if you think about all the orders coming in and out, just trying to balance out, all right? Not every order gets filled at the exact same price, and there's a lot of shuffling around, all right, during kind of that opening period. All right, people are entering their orders, some are exiting their orders, and so forth. All that shuffling around kind of balances price out. Once price is balanced out, and that typically is around, after the first 5 minutes. Okay, that's why we call that the rotation. And then from that on, we look for more of a directional kind of bias, and we use that opening range average as that marker. Okay, so targets are, again, more symmetrical, right, than, using Fibonacci numbers or anything like that. They're just simply taking the range and just kind of putting multiples on it, okay? Again, there's nothing magical to it, all right? And, that's something, that we stress to our members is, we're not trying to predict where prices are going to go. Rather, we want to identify the directional bias, if there is one, and get on the right side as quickly as possible with the lowest possible risk. I mean, that's simply, and then try to ride it, for what we can get out of it. Okay, so that's the opening range. There is more detail, about the opening range strategy, contained in our educational material, but just wanted to highlight that as one of our key markers to begin the day. Okay, as the day unfolds, or even prior to the day's opening, it doesn't really matter. We go over to tick charts, okay? And some of the core tick charts that we use, there's a variety of them, but on the S&P specifically, we use a 750 tick, and we also use a 1500 tick, all right? And we're always using a couple time frames, all right, above. And so, for instance, crude oil. All right, I know a lot of people use range charts and so forth. We use volume charts, and we use a 300 volume and a 900 volume. All right, so 3 times the core execution chart that we use. All right, so on this example, and again, these examples that I give you here of bull stackers, premiums, discounts, and so forth are not specific to the contract. Okay. The concepts and the patterns that I'm going to show you are usable regardless of what instrument you trade. Okay. Now there are rules underpinning each of these trade setups, and again, that's all deep into the educational material. But really, what we want to display here is our favorite setups, right? Which ones get us pumped up on a day-to-day basis? Which ones are our bread and butter, right? We want to come in every day. We want to know that a specific trade setup that we have battle tested in the past, if a pattern has developed, okay, and we're pattern traders. We're all pattern traders, okay? If you decide that, if you say you're a momentum trader or you're a reversion trader, well, that's a pattern, all right? So regardless what style you are, you're a pattern trader. Okay, what we want to do, and we do very successfully in our membership for our folks, is that we primarily stay on the correct side of the market action. Now, we may not get the high of a move, and we may not get the low of the move. As a matter of fact, I prefer to give up 10% of a move. All right, the lower slice and the upper slice. I want to get 80% of a move. Okay, I kind of consider myself an 80% trader. And that doesn't mean I'm 80% correct, right? It just means that when we're in a good developed trade, I want to try to capture 80% of a potential move. Now, again, I don't know how far any move is going to take us, all right? So we manage our trades accordingly. But we try to maximize as much as possible. Do we always get 80% of a move? Absolutely not. Okay, I'd be remiss to say that we do, but we do try and to strive for that. Okay, so what with the bull stacker and subsequently the bear stacker formation, if you think about the term stacker, it actually one of our members created the name for us, and it simply kind of relates to the fact that you've always heard the terminology the dealer is stacking the deck. Okay, how can we win against the dealer? They're stacking the deck. Well, if the dealer is stacking the deck, then we want to be the dealer. Okay, so kind of straightforward there. I don't want to be on the opposite side of the dealer. I want to say, what is the dealer doing? How is he stacking the deck? What is he using? All right, I want to use those same things. So what we've effectively done here is create a trade setup that identifies a couple things. We talked about that price, pattern, momentum, all right, as the three key factors. The bull stacker has a variety of components to it. One, all right, there's an ATR shift. All right, it's an average true range shift, and we call that a point break. Okay, now the point break it is an important part of price action. There are a lot of algorithms out there. All right, now we all know about the predatory algorithms, all right, that they talk about in the news a lot. But there are plenty of other algorithms out there that are just straightforward algorithms, buying and selling, clicking off, their order flow based upon if certain conditions are met. One of the conditions that I'm aware of, because when I was at the investment banks, I was on a committee, this was years ago, I was on a committee that we developed. We were part of an algorithmic committee, and each of us had to submit ideas on what type of algorithms that they wanted to create. And there was a lot of innovative algorithms created. Again, I'm going back 10 years now. Okay, and they've gotten much more advanced even since then. But back then we weren't thinking about high frequency trading as they do today. Rather, we were looking for more structural shifts in price. And the ATR, average true range, is a way of measuring a structural shift. And the ATR shift that most trading platforms have standard, all right, are not very useful. And the reason simply being is because when price either touches or penetrates that ATR line, you get a lot of shifts. Okay, our particular algorithm is based upon an algorithm that I used 10 years ago plus at the investment banks. And so I've instituted that in our particular ATR line. So not only, and there's a lot of benefits to that. One, it identifies what we call a point break, and that is a structural shift in price. All right, so I know when, and here's the thing, when there's a lot of price kind of shuffling around that goes on, well, the question is, how do you know whether it's a valid price shift or not? Okay, and this is where a lot of people get in trouble, all right, because they're trying to anticipate a price shift, and they tend to be on the wrong side. Okay, so what this algorithm does, all right, is it identifies a structural price shift, and when that price shifts, it is a valid shift. There is no very, very few false moves. Okay, and we use it very effectively. So once that price shifts, again, it's not predictive in the sense that, I mean, in one sense, there are some conditions that we know that there's more likely a price shift coming. And again, that we get into the details of that with our members. But frankly, once the price shift has occurred, then I know without beyond a shadow of a doubt that there's no way I'm going to be long or short against that price shift. Whereas the majority of the population out there are still trading from the old side. In other words, give you an example here, what we show on the screen is that the prior trend was down. okay? Then there is a, low. Now this does not look like a traditional low, okay? It's more like a V bottom low, all right? And price comes up, breaks up through the ATR, all right? But what people have in their mind is, hey, they've been selling it, I'm going to sell this pop. And they're going to keep shorting it, okay? So they shorted at this level, the next level up, and so forth. And before you know it, because they were shorting them, down here earlier at the 1815s. Heck, I'll short them at 21s, 22s, all right? And they're what they've become is they've become trapped in an old bias. They have not been able to recognize that actually the price action is shifting, all right? So what our bull and bear stackers do is accurately identify price shifts. And then once we know that there is an accurate price shift and a valid price shift, simply the job for us is to get on board, okay? We don't know how far something's going to take us, all right? We don't know how far price is going to go. We do know I want to be on the correct side of that price shift, all right? So there's several ways of entering the trades. Again, I won't get into too many details about that, but I've put a couple X's, all right? And simply, we call this the right side pivot rule, all right? Where price makes a move up, pulls back somewhat, all right? And then finds a, support point, it pivots, and then it starts continuing in the primary direction, all right, of the new developing trend move, if you want, or directional move, okay? Now, if I didn't tell you this was an intraday chart, which it is, all right, if I told you this was a daily chart, this would be one hell of a big trend up, wouldn't it? A true trend. Well, this just happened on an intraday chart, and although it has trend characteristics and qualities, it's really just a directional move up, okay? And I believe, if I'm not mistaken, this was followed by a move back down. Okay. How do I pick the ATR value? That is when I would say trial and error, but I don't actually have trial and error because I've been using it for a long, long time. The majority of the time that what we use is really kind of dependent upon the individual contract. Okay. Crude oil definitely will have a different what we call factor, ATR factor. Okay. So simply what you're doing is you take in the ATR value, all right, and again, I would not take an ATR value if I'm trading an intraday time period, okay, I'm not going to take a daily ATR, okay? If I'm using a, just as a simple example, if I'm using a, 3 to 5 minute chart to use intraday to make my decisions and executions, okay, I'm going to use the ATR value on that 3 or 5 minute chart. Okay, I'm not going to use a daily ATR. It will be too big. Okay, so it won't be any use to you on an intraday basis. So the ATR values that we use, okay, is they're actually automatically adjusted for whether you're using a time chart, a volume chart, a tick chart, or a range chart. Okay, all right. We use primarily our trading is we utilize tick charts and volume charts for kind of intraday action. We use a 5-minute chart, 30-minute chart. We use profiles. Okay, we use all that stuff. All right, but in terms of the ATR, so if you just kind of go along, the right side here, we get an ATR shift. And then what we call the trend displays a bull shift developing. Okay, we have what we call trend bars, all right, in our software. And by the way, this is all on the Sierra Chart platform, all right, and it's all pre-coded and pre-templated for all our members using the Sierra Chart platform. And then the entry technique, as I mentioned, is what we call the RSPR, right side pivot rule. All right, and that allows us to enter at not the lowest price, but a what we simply call a fair price with a known risk level. Okay, and again, every trade that we put on, we have a stop in place, and we know what our risk point is. Okay, if the trade doesn't ultimately play out, and then we have a management technique. Okay, of multiple contracts, and then we scale out of them to get what we call risk-free and so forth. Okay, and that's kind of standard to what we do. And then not only is the ATR line used as a identification of a point break, all right, of a shift, but it's also used as trade management. And that's traditionally what an ATR trailing stop, most people have known it to be, all right? And most people don't really use it as an indicator to show shift. Rather, they use it as a trailing stop management method. And that works very, very fine that way. We use it in both capacities. Okay, so there's a bull example of a bull stacker. And again, as Jim said at the outset, past performance not necessarily indicative of future results. So I am trying to display here, the very kind of, best of what we look for in a trade. And there are many opportunities that are not necessarily as clean as what I'm showing you. All right, but they all have the same qualities. All right, now this is just the exact opposite. In a sense, a bear stacker. Okay, so trend is up. I'll go a little bit, quicker here. Trend is up. You see the ATR shift. All right, so again, our point break. Right? And what the point break ATR shift truly represents is that there's enough energy, and we discussed this in our membership. There's enough energy, right, to actually change the direction in price. So if we've had a consistent uptrend in effect, all right. And and the idea is, hey, we want to buy the pullbacks. All right. Okay, we all know that. Right? Nothing unique about that. But what happens when price goes a little bit further? How do we know that this pullback, right, has more energy to the downside in this example, right, than the prior pullbacks? Okay. What is it that's going to tell you that? Right? Our ATR will. Current ATRs that are out there may not. All right, ours do the way we've had it, the underlying code. Okay, so again, as you can simply see here, just the kind of reverse of what we mentioned on the bull stacker. A bear stacker shows a break of the prior ATR bull line. All right, and then simply shows a shift. All right, and this shaded zone here, by the way, all right, on our charts is what we call our fair value zone. Okay, so it's a combination of two moving averages, all right, 34 and 89, just simply our fair value zone. And so the trend to bar shift, right, shows a bear shift developing. Again, entry technique, I've highlighted just simply right side pivot rule, and again, using the ATR as a management. Okay, these are core to what we do on a daily basis. And I'm going to get some time here. I'm going to show from today's action here. Now, the next category is really, there's a lot of moving parts here, but this is the core of what we do. All right, you see the ATR lines there, the white line and the blue line. So those are what we call dual ATR lines. All right, and the great feature of Sierra Chart, by the way, and Patrick has gone over this in his webinar classes, is that it's something called the study price overlay. Okay, and Sierra Chart does it wonderfully well, whereas other platforms just fall short. What we're able to do is on a core chart that we want to be looking for, we can then overlay the next higher time frame, all right, whatever it is that we're looking to observe. In this case, we're looking to observe the next higher ATR level. All right, so this is an example of the ES on a 750 tick chart. The 750 tick ATR line is the white line, and the blue line here is the 1500 ATR line. Okay, so we're actually able to see the next higher structure level, all right, which is really an advantage in how we use it. Okay, CCI is down below, and we again highlight it as a premium, a discount at the plus or minus 100, and the 200 extremes on the upper and lower edges. So what do we have here? We have a shift, bullish shift, right? So we get that bull stacker, all right, shift. And as prices are moving up, 200 extreme readings, all right? Again, that's part of the core of what we do as well. We have our software signals them by displaying stars. And that tells us that there is new momentum coming into price. All right. Again, we want to measure, all right, what's happening in price. It's not just enough to see the price bars there. All right. That's not good enough. What is happening within the price bars? Okay. Now, many people use, volume delta charts, right? Footprint charts, the number bars. All right. We use those as well. All right. The imbalance features that they show. All right, they're excellent, okay, but not everybody is competent in their skill set to watch those. All right, so what we're able to do here is kind of supplement things that might be happening in volume, but we're overlaying them on the chart, on a bar chart, okay, on a tick bar chart. So these stars represent 200 extreme. They represent increasing momentum. Now, when they happen at the beginning of a move, all right, when there's a structural shift in the beginning, they're very, very useful at the beginning and at an end of a move. Okay, so that's one of our components that again, these are all automatic. There's nothing to do. As a matter of fact, I'm going to show you a new piece of software that we have. All right, that actually scans for all this stuff live. All right. Okay. And now next thing is the once we get a move up, we're looking for a pullback. And now what we're looking for is what we call our discount signal. All right, using the CCI. All right. Simply, again, I want to just stress that what we do is not unique to, in the sense that we have the magic wand, all right, of trading. What we do have, and the tools that we use are used in such a way as to be able to measure, all right, when a pullback or when a breakout, okay, is qualifies as a valid breakout, or has a, everybody knows I want to buy a pullback in an uptrend, right? It's not unique. Question is, how far of a pullback, all right, does price need to come back to qualify for a pullback, to qualify for an opportunity to enter the trade with a low risk to reward type ratio? Okay, that's the big question. And a lot of people miss trades simply because they're waiting for it to pull back some more perhaps, and it doesn't. All right, and it runs away on them. Our discount and premium signals give us almost to the tick, and it's kind of uncanny, but it is almost to the tick that that gives us a signal that the balance of risk to reward potential has now come in a good favor. Okay, and again, nothing is certain, nothing is guaranteed. It's just that we're trying to weigh the reward risk ratios, all right, in this whole process. And so with that, we get a signal, okay, and the signal gives us not only audibly, visually on the chart, it actually shows us a little bar there that there's a signal. And I've placed 1, 2, 3. All right, so this is an example of what how we would trade one of these. Is once we get our signal, and we need to get the signal. If we don't have a signal, it's not ready yet. But once we get the signal, then we want to be active in taking and looking for that entry point. And there is no best entry point, although we have some text here on the chart that tells us, gives us a reference price. So this discount was 20.65.75. So we could use that saying, okay, 20.65.75, I'll buy them at 66. Okay, a tick above the high bar. All right, that's very much acceptable. All right, you may end up buying them a few ticks above that price. That's acceptable as well. Okay, so again, what we want to be is we want to be buying in the direction of trend on a pullback where available, where the market offers us a pullback, and we want to read that pullback from a statistical basis. Okay, so where has the market price pullback enough? All right, and sometimes the pullbacks are very shallow. All right, and we need to know that as well. All right, and our discounts show that. Again, entry at say 0.1, Management of the trade would be, let's just say if you bought a 2 contract position, entry at point 1, exit 1 contract at say point 2. Again, there's no magical formula. All right, we have some guidelines for our members, but there's no magical formula. We want to get to what we call a risk-free point. All right, and then manage the position, perhaps using that ATR stop. Okay, and so let's just say point 3 would be a potential for another sale based upon that. Point is, with these discounts, and we'll show you from examples from today, we want to get in on the trend. We know that the trend is not, more than likely not complete, not ended, and we want to get on board, and this offers us a very good opportunity, way of entering in on price action with good reward risk ratios. Okay. And again, just on the flip side now, all right, you can kind of think about, okay, well, we want to get in on the long side of a discount. Well, we want to get in on the short side, okay, of a downtrend. How do we get in to the short side of a downtrend? All right, the rules that we have, the structure of the trade setups simply don't change whether you're trading S&P, Russell, or any of the other contracts out there. You're simply following the same stated rules that we have in our education. As you can see here, the premiums, and a premium simply is a pullback within the context of a downtrend. All right, but the premium tells us, okay, it tells us that using the CCI indicator, it gets above this 100 line, tells us that statistically, and again, my background at the investment banks and how I've learned has really kind of from a statistical background where most people consider price to be overbought or oversold. I think that's the conventional term. Investment banks really don't, at least in the day that I worked at the investment banks, we never really talked about price as being overbought or oversold. Okay, what we simply talked about was that price was statistically overbought or statistically oversold. In short, we use the term StatX, all right, for statistical extreme. And so it was either a StatX long or a StatX short. And again, the tools that we used told us when it was stat, right, when it was statistical. And at that point, that's when we took trades. Now guys, keep in mind, a lot of this stuff was developed while I was at the investment banks, while I was a market maker. All right, as a market maker, I used these techniques. All right, so everybody out there says oh, you can't beat the market makers, right? They have all the information. It has nothing to do with information. All right, I had no more information most times than anybody else. All right, what we did though have is a core method that we executed our process by. Okay, and we fought, again, it's like being the house, right? The dealer, right? The dealer in blackjack, right? They're gonna hit on 17 every single time, right? That's their rules, and they don't bust their rules. So when we've developed this method, we don't bust our rules. When we have a setup and it gives us a signal, it's simply win, lose, or draw. Okay, I don't know if this is any one particular setup is going to be a big winner. I know that if it doesn't win, my loss will be small relative to my potential gains over time. Okay, what tells you to not trade at all or go home? All right, we have rule sets on our setups of whether or not it actually qualifies as an entry trigger. Okay, so yes, there are times where a signal will give us an alert. Okay, so what we call these arrows, all right, so these arrows that show on the chart here are live, by the way. These are all programmed into the software. All right, there's an audible and visual alert, and we have some criteria based upon whether or not we take a trade. And again, that's more detailed into the education. All right. So again, what I want to just highlight here and make sure that we're aware is that although these trades look like, wow, this is beautiful trade. Okay. These are structural setups that we look for in an ideal situation, an ideal premium discount in a trending condition. Okay. How do we get into that on that trend? Today is a perfect example. Again, if I have some time here, I want to get into that in just a couple minutes. All right, because this is the last static slide, so I want to get into looking at some of the trades from today. But once that setup is established and the criteria is met, okay, we want to take that trade. All right, win, lose, or draw. And it's really at that instant that most traders, all right, fall apart. At the time that they should be taking a trade, they hesitate, they're unsure, a lot of emotions get in the way, and they don't take the trade, and all of a sudden the trade's gone. Okay, we try to these are just tools that we use. All right, again, software does a great job. Sierra Chart is wonderful. It's our favorite platform. It does a great job at displaying this stuff. As a matter of fact, let me before I get to the live charts, let me bring this into view. Okay, does everybody see that Scanalizer dashboard? What this Scanalizer dashboard shows us is it's an algorithm that we've developed. This is a brand new product. It's part of our software, and it simply scans for all our trade setups. Okay, and you can see Russell, all right, on a 400 volume, crude oil, NASI, S&P, and so forth, and it scans for the current trend condition, all right, and the ATR, which we've discussed, a bull stacker, bear stacker, all right, a premium or a discount, and a 200 extreme. So this is a piece of software that continuously runs on our platform all day long. There is visual and audible alerts to it, so you can actually track multiple contracts, all right, and again, it doesn't just have to be the E-minis. It can be gold, silver, euro, individual stocks, okay? And it does a great job, and it does a lot of the heavy lifting for us where, if you are trading multiple contracts, then this is a very, very useful tool. If you're simply just trading one contract and simply one time frame, all right, it probably won't be a whole lot used to you, but most of our traders, across the spectrum, do trade multiple contracts and instruments, and so this is a very, very useful tool. And again, anything that can help us use the become more efficient in our trading, that's what we shoot for. Okay, so let me switch the charts here and get to a live chart. Okay, this is today. We have enough time, Jim? I see it's coming down to about an hour. All right. If we have enough time, I just want to kind of quickly go over what we have, what happened, unfolded today, and so I can give you an idea of, we're all set then, Jim? Yeah. Okay, terrific. So here's today's chart. Now, this is a 1500 S&P, all right, and again, this is on the Sierra Chart platform, so it really fits well into our wheelhouse. And again, Sierra Chart, by the way, just to give some notes about Sierra Chart, if for those of you that are new and have not used Sierra Chart, I know it's a primary platform choice of Infinity and us as well. And again, our software is coded up for Sierra, NinjaTrader, and TradeStation, but in our trading room we primarily use Sierra Chart. All right, it has a tremendous number of features, and I hope to show a few of those here, and I'll try to make this a little bit quicker. But I wanted to give you the core of what we do, and then now show you, what actually unfolded today. in how we traded some of these things. But Sierra Chart, ease of use, right? They have standard built-in features. One of them is real terrific, which is the number bars, all right, and the imbalance chart. That's relatively new for them. All right, so the integration between Infinity and the platform and what we do. By the way, if you decide to eventually join the membership and want a like free trial of the software of what we do, it's all integrated and it's really seamless. Okay, so that's a great feature that if you wanted to test out the platform. Okay, so here's today. All right, this is the starting off of the day, and again, early this morning we had highlighted that the 22s, 23 zone would be potentially some key resistance. All right, do I have an account with Infinity? Yes. All right, I hold an account with Infinity, an active account with Infinity with Patrick Zielbauer, definitely. All right. So today, this is what we were talking about. Now, all these kind of lines coursing through price are labeled here on the right-hand side, and we had various, the ATR lines of a 4,500, a 1,500, a 750. All right. Again, don't want you to get lost in all the course of the lines here. Rather, just kind of holistically look at this. This blue line here is our opening range rotation midpoint that we spoke about at the beginning. So again, overlaid right on our charts. I don't have to, look at 17 different charts and get distracted. I know exactly what my opening range rotation midpoint price marker is. We have the volume trend, which is again the 24-hour VWAP. We also monitor the day session volume trend, which is again day session VWAP, all right, as well. So today in our trading room, this is all live action that took place in our trading room today. That we were looking for resistance up at this key resistance zones. This does not mean we fade it as it goes up there, but as price moves up, okay, and then okay, let me just get an arrow here. Moves up and then comes back down, okay, we would then elect to take a right side pivot rule short, all right, against the high, okay. All day or just a few fixed times? I'm not sure what the question is, Jim. All right, we're open all day, if that's your question. We start at 9:15 a.m. and we run right till 4 o'clock, and we have a break in between, for lunchtime. All right. So this is one of the things that we did this morning. All right. And if you can tell, I'm going to put some vertical lines here. All right. Here was an ATR shift. All right. That yellow line. That was our first notice that this move up failed. Okay. We want to know when there's a failure. This is a failure, okay? That's, kind of point one, all right? As you can see, price continued weakness, all right, down. Did not hold the 5-minute average. Strike number 2, okay? Another negative, okay? Then thirdly, all right, there was enough energy today, as we all know, all right, that price took out this prior low here at the 12s. Now yesterday we saw the 12s as an important level, all right, late in the day that it held support. We talked about this morning in our daily trade strategy that we sent to our members early in the morning. As a matter of fact, let me quickly show you a segment of that. Okay. This was the daily trade strategy that I wrote this morning, and I write this each and every morning for our members, and it's sent out prior to the opening. Okay, so we talked a little bit about the Eurozone weakness at the beginning, okay, but particularly here in the scenarios, okay, so I highlight 2 hypotheses. One is a long hypothesis. Second scenario is a bearish hypothesis. What we highlighted here, all right, and again, I wrote this about 7:30 Eastern time in this morning, and it was in everybody's inboxes by about 8:30, so an hour before the actual opening. That scenario two, that if price violated the 209.12s level, then additional liquidation is more likely to unfold. And odds favored about 40% pushing price down to some various levels. All right, breakdown level at the 2000 all right level. And then if price broke through that 2000, this was today, if price broke through that 2000 marker, all right, the extreme low target for the day was 1986. All right, I think the low of the day was just slightly under 1986. As a matter of fact, we took a long trade, a spec long trade at the 1986s today, live in our room. So, so I write that daily trade strategy for everybody each and every morning, and it's put everybody's inbox. So, again, going back to the chart here, what happened today is, we broke down through that 12s, all right, and we got not only the 750 ATR shift, but we got a 1500 ATR shift. So right here in this area, right here in this zone, all right. Now, most people would think that they've missed the high. They've missed the short trade, okay? Remember, what, if you recall what I said at the beginning, I said, I'm willing to give up the upper and lower 10%. I'm trying to get part of the bigger move, all right? And again, we trade for 2 points, 3 points, right? Most of our trade setups, we shoot for 2 to 3 point rotations, okay, very consistently. But there are times where, in a case today, where, if the market is moving directionally with energy, okay, then heck, I'm not going to go for a 2 point trade. Maybe I'm going to try to go for a 5 point trade, okay, those type of things. So I guide the room. I'm not just a moderator, but I am truly a guide. I trade actively. I run some money, and I actively guide our members, throughout the course of the day. Okay, I am talking, I am typing in our room, I'm showing our charts live. All right, so there's no the full transparency of everything that we do, and again, I hold myself accountable to all our members. I don't want to get anybody on the wrong side of the market. And again, one of my key goals is to keep everybody focused in being trading in alignment, okay, on the correct side. How to determine the ATR threshold for a switch? Again, that tends to get into all the fairly proprietary information about how we have it coded, okay. So as this progressed down today, and again, we know this was a pretty strong, aggressive down day, okay. What we are looking for is once certain price points are violated, right, 2012s and then 2009 50s. What was 950? Does anybody remember? It was yesterday's. Okay, it was yesterday's low. Okay. All right. Yes. If you have to run, Fred, again, you just sign up on the free trial. All right, from the website, and you'll get access again. Okay. So here's our trade setup. What we look for. Once we broke these levels, all right, price kind of retraced a bit. Now you can see this. Now we're looking for premiums today, right? Because we're looking for pullbacks within the context of a downtrend. So there's your premium at looks like 200,625 or 825. Okay, so this is live. It gives us a audible and a visual alert, and simply it's in alignment. You get the 750, 1500 ATR lines, right, that are overhead, so we know that the directional movement is by all means down. And so we're simply looking to, take a trade. There's your alert bar, all right. Take a trade following that alert bar, all right. It puts us in alignment, and that would be a short trade. So how you enter that trade is again your choice: market order, stop orders, that type of thing. But it puts us in alignment with the next move, all right. And on our stops simply would be above the high bars, or you can actually use the trailing stop lines, right, as a guide. All right. So not only is it a point break that we discussed earlier, but now it becomes a trailing stop management tool. All right. Again, all combined into the same, methodology. Again, we're not switching methodologies back and forth. It's all contained in the same one. All right. So there's an example of one of our short entries. Okay. And as we, the day progressed, again, I've just given you examples from today. All right. Again, there wasn't another new entry. All right. Until, again, as prices went, lower here during the session. I mean, any one of these points could have been, I bought some, again, not long, but I bought some to cover shorts. Okay. All right. Then the next opportunity, as you can see here, we got a little pop in price, premium 91.75. Okay. And there's your alert bar right there. Okay. Very clean. All right. Very clean. All right. Again, it's not ambiguous. Very clean. And again, we want to, and what I do for everybody in our trading room is I alert them to the potential of the next trade opportunity. I don't call out trades, okay, necessarily. Remember, my little assistant here and everybody's assistant, our Scanalyzer dashboard, actually highlights trades. So you can see here premiums with the price, discounts with the price highlighted in there. What value of that discount price or the value of the premium price, okay, shows. All automatic, all live. All right, there's not a whole lot to do except for monitoring what you're looking for. Okay, and so what I do for everybody as moderator, as guide, all right, as your trading guide, is that I want to highlight to everybody what the next opportunity is. Okay, so be on the alert for a premium, everybody, potentially a premium, and I generally kind of give a price zone of where that premium may occur. All right, so there's an example there. A little bit later on, all right, we got a move back up to the 98s, which turned out to be a pretty significant resistance point. And that big fat red line now is the ATR line, but from a 4,500 tick chart. So 3 levels up, all right, 750, 1,500, and 4,500. Our members use these lines, all right, to actually take trades from. All right, there's a kind of an advanced, type of trade setup here, and again, this is a premium, say up here, we got a couple alerts over here, and there's an alert right there against the ATR line. So again, using, one of our established methods of entry, right side pivot rule, bam, enter it. And again, we're not trying to pick the high, guys. All right, we're not trying to pick the low. What we're trying to do is get in alignment, all right, with the price. In other words, price pushed up, it pivoted. All right, once there's a pivot, take the trade from a key level. We don't know how far this is going to go. All right, it could stall and move up, and okay, that's why we use stops, right? But if it does work in our favor nicely, as of course today did, because it was a lot of downside momentum, all right, it can be very, lucrative, okay? But again, past performance not indicative of future results, but we do, look for it. Now, somebody had asked, I forget who it was, somebody asked what happens when, the trades don't, develop, okay? So here's, and by the way, this is the extreme 1986 price target that we had that I outlined in our pre-morning daily trade strategy report. Okay, we were looking for the 86s to be the extreme low, and turned out to be 84.25, but close enough for government work, right? So the question was, what happens when you get a situation where a premium or a discount doesn't play out? Okay, what does that indicate? What do we do in those instances? Okay, how do we know when to go home in a sense? All right, well, I think was part of the question. Well, here's an example. All right, let me see if I can highlight here. Here's an example. I'm going to throw some lines up here. Here's an example of a few premium conditions. All right, now these alert bars, okay, these alert bars, Scott, again, this is an intro to our favorite setups. All right, it may be hard to follow today during the webinar, but again, we're going to offer everybody a 2-week trial. Come into our trading room, and if you find that you want to further your education about what we do, all right, all this stuff, we have videos and documents that highlight all the specifics about what we do. Okay, so and I'm just going to kind of end with this last part of the presentation. All right, because we're getting here about a minute, an hour and 15 minutes. But these were conditions here where we had premiums that never truly executed. Okay, never triggered off. And so as a result, what happened was price had enough strength to move up. Now, if you recall a few minutes ago, I was mentioning those 200 extreme stars. Okay, and that means there's new momentum coming into price. All right, and so that occurred, and this was into the afternoon, development of the afternoon rally today. All right, coming off that extreme 86 low, price pulled back right within the zone. Let me just highlight this zone of the 750 and the 1500 ATR lines. All right, and again, we use these lines as structure, and as I mentioned, there are several algorithms out there that use structure ATR lines as part of their core algorithmic method. All right, and again, they're not high frequency, they're rather just an algorithm that looks for these structural patterns. Okay, and they simply take trades from them. Okay, so that being said, this was an opportunity where we took in our trading room a pullback, and we simply, again, right side pivot rule. So this constitutes a discount, all right, a pullback discount within the context of a developing directional move. Okay, so that's why these ATR lines, these values are important, is they indicate trend shift or the development of a trend shift, an early trend shift. Okay, and so we were able to get on board. All right, we didn't have that many trades in the room today. All right, we had, I think, maybe 3 or 4 trades throughout the course of the day. We're not tick traders. We're not trying to get 5 ticks, 6 ticks back and forth. What we are trying to do is stay in agreement with the primary underlying structural activity, and then look for these patterns, all right, that we know have been battle tested, all right, and then offer us a low risk to reward potential. Again, nothing guaranteed, but we know what to be looked for, and there's certain meanings to these setups. And when we see these patterns unfold, okay, we're definitely looking for these to get on board with. Okay, so that being said, I'm going to kind of end the presentation here. These are our core setups that we look for, and again, just by way of just kind of wrapping this up here, as price came up, you can see another series of a couple discounts that fired off again on our software live. Okay, and of course they went up to some execution longs of those. All right, had a nice little move up. Okay, and then late in the day here, after price kind of peaked out. Where did it? Notice where it peaked out, and we made reference to this in our trading room live, and I said, hey everybody, notice where we're peaking out. The prior day's low at 950. That's not that's not coincidence. All right, A lot of people, were looking to try to get back to the prior day's low, all right, from lower levels. And then after what happened there, we got an ATR shift, okay, and then the process effectively begins all over again. A push down, a test back up, okay. The test failed at the ATR line, and then again a late day, into the close, settlement sell-off. All right. So again, our goal is to maintain alignment with the underlying structure and dominant force in the market. The software, the ATR, our trade setups, my guidance, help give an edge to our members to accomplish that goal. Okay? And so that is kind of the end of the presentation. What we'd like to do, is offer you for taking your time out. We know that your time is very important, and again, there's a lot of information in this particular webinar on our trade setups, and we wanted to try to make this a little bit more educational rather than just like an infomercial. Okay, so we wanted to kind of outline truly our best setups there that we talk about on a day-to-day basis. A lot of information, a lot to absorb. Of course, the webinar is recorded, so you'll have an opportunity to go back and review it at a future time. But in the meantime, what we'd like to do is offer everybody a 14-day trial. Come on in. Normally, our trial is 7 days. All our good friends at Infinity, anybody that's associated that comes into the webinars, we offer a 14-day, double the time. All right, so you can really get kick the tires. All right, ask me questions, really get an idea of what we do, and to see if it fits what you're looking to accomplish. Some of you perhaps have already some trade plans and methodologies that you're working with right now. Okay, we have folks that are in our membership that are 30 and 40-year veterans. All right, they don't participate in the room necessarily. Okay, in the chat box in a sense, but they follow everything that we do, and they quietly trade their plan with our with our indicators. Okay. With the software, with the Sierra Chart platform, okay, and they listen to the guidance and they read the daily trade strategy that I put out in the morning. So, and then there are other folks that are, again, are not, as versed, and so we have a wide variety. Yeah, I'll give you the URL, all right, to get into the trading room and so forth, all right. So let me just pop in there. So come in, take a free trial. The benefits, all right, you get a lot of active management and so forth. Now, here is the here are the URLs. Okay, if you just simply go to PolarisTradingGroup.com. Okay, and what I'll just show you here. All right, give me just a moment. Bring up the website. Okay, and I'll show you where to navigate. All right, so if you go to the website, all right, PolarisTradingGroup.com, front page, on the right-hand side, you'll see live trading room. All right, free trial. Snap on that. All right, fill in the information. Okay, let me click on that. Fill in the information, and we'll send you an automatic reply and access password. All right, to enter into the trading room. You will receive a reply that says 7 days. Don't worry about the 7 days. I will extend everybody out to 14 days. All right, for coming in and spending your time with us. And again, if you have questions, definitely speak to either Patrick's, our core representative, Jim, of course, and any of your Infinity Futures representative they may have currently. All right. So with that, I don't think we have time for questions, but I'm available for any questions. Please email me, David@PolarisTradingGroup.com. All right. So I want to thank you for your attendance. We're coming in. I've already extended my time, and I appreciate your time for our first webinar this year. All right. So hope. Thank you, Jim.